How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel dedicated to investing in my personal journey to amassing $100,000 within my Vanguard brokerage account. Now, as an update, that account is currently sitting at $76,532.63. That is up by $532.42 since my last video. Certainly coming after a week of a lot of market momentum, which we're going to break down in today's video and get down to that macro level overview of what exactly has happened. As an investor, it is imperative you understand that macro level overview for you to make the wisest possible decisions within your own investment portfolio. Then I'm going to wrap us up here by talking about the 3 stocks that I've doubled down on last week, buying more shares of each of them. Of course, just before we dive in, go ahead, tap on that thumbs up button as it greatly helps me out in growing the Blue Lion Finance channel and getting the word out there. Most importantly, if you have not already subscribed, go ahead, tap on that subscribe button. I not only want each and every one of you along for the ride with me, but want all of you with the opportunity to take advantage of the $50 One Hope Wines gift card giveaway I have underway right now, in which one lucky winner, the moment this channel crosses the 1,000 subscriber mark, will be chosen and sent that gift card to pick out the wine of their choice. Now, with all of that out of the way, YouTube, let's go ahead and dive right in. So we had one heck of a week last week when it came to market optimism, market momentum, and gains portfolio-wide, at least in my personal portfolio, but I am assuming for yours as well. And I want to break down what exactly happened because come the week's end, a lot of that market momentum and optimism seemingly faded away. And in my personal opinion, as already mentioned, in order for us as investors to just make the best possible investment decisions, it's that macro level overview that we certainly need to understand. So last week, what happened? Well, essentially, we had 2 Fridays ago, Jerome Powell come out and share with all of us what exactly the Federal Reserve's approach was going to be regarding tapering. And he shared with us that they're going to take a conservative approach contingent upon these COVID cases. If Delta is going to continue to hit us hard and these case counts are going to continue to rise, the Federal Reserve is going to be able to pivot in whichever direction they need to in order to just continue to help the economy and not allow it to falter. But if these COVID cases begin to trend downwards, the Federal Reserve is certainly going to begin tapering much more aggressively than they already have been. So I believe that allowed a lot of investors to just have a ton of confidence. And then we came up on the end of the week where we had 2 reports come out. The first of which detailed exactly how the consumer was feeling and shed light onto the fact that consumers are not spending as much money, at least in hospitality and leisure, which says to me as an investor that we are in fact scared of Delta. And if we don't begin to actually scale back on going out and pretending like this whole thing doesn't exist, we're going to continue to see days worth of market volatility. Now, no big deal for me because those are just days to buy stocks on sale. But overall and collectively speaking here, we need to do our part. And certainly lives are on the line, which is why I am, of course, taking it that seriously. Now, coming up on the market's end on Friday, we had economist reports come out that we certainly did not meet expectations when it comes to growth in the economy. And that was reflected in the jobs report where economists were expecting 750,000 jobs to have been created in the month of August. Yet we came in at 250,000 jobs, which is certainly showing us that economic growth has slowed, and that certainly spooked the market. However, I did double down on 3 stocks last week, so I'm going to get right to them right now, with the first being Stag Industrial. That's ticker symbol STAG. Now, Stag Industrial is a REIT, so a real estate investment trust. It primarily invests in industrial warehousing, and I gotta be honest with you, it has been on fire this past year. As of this video, it is up 34%, which certainly gives me a ton of confidence as an investor to continue to invest in Stag Industrial. But as a dividend investor, I'm looking for companies that are, of course, going to be increasing that dividend year over year, which is exactly what Stag Industrial has been doing. They were founded back in 2010, IPO'd in 2011, and each year they have raised their dividend. As of right now, that dividend yield is sitting at 3.4%. And while yes, there are plenty of bears out there who believe that Stag Industrial is way too exposed to the e-commerce space, I personally beg to differ in sharing with you that yes, Amazon is Stag Industrial's biggest tenant, which is certainly going nowhere anytime soon. Amazon only makes up about 4% of Stag Industrial's revenue, and on top of that, the e-commerce space as a whole takes up less than half of Stag Industrial's portfolio. Now, when it comes to their portfolio, they have a total of 500 buildings. They're operating in 39 different states, and they have other clients on their hands from Ford, FedEx, Costco, Penguin Random House Publishing, all companies, again, that are just not going to be disappearing anytime soon. In fair disclosure, I only recently began investing into Stag Industrial, so I don't have the biggest position when it comes to Stag. I certainly am dollar cost averaging my way in, and I'm going to be doing so most likely on a week-by-week basis. So therefore, last week I bought one share of Stag Industrial for $42.84. But what is more is that analysts are expecting Stag Industrial's stock share price to continue to rise, with a median share price being put at $45 per share and a high stock share price at $50 per share. So room for growth, and certainly an opportunity for you to get invested into Stag Industrial as we speak. Moving right along, the second stock that I bought more shares of last week was Johnson & Johnson. That's ticker symbol J&J. Now, this is of course a company that I don't believe needs any sort of big introduction, but what I will share with the one-off chance that there is an investor out there who needs to know more about Johnson & Johnson is the fact that they have a 130-year rich history in just being an industry leader within the healthcare industry. Now, Johnson & Johnson essentially breaks up into three different segments, that being the pharmaceutical segment, medical device segment, and consumer goods segment, with 80% of their revenue flowing in from medical device sales as well as pharmaceutical sales. Now, this again is an industry leader not going anywhere anytime soon, and as my portfolio is all about investing in quality companies at wonderful prices, Johnson & Johnson pulling back this last week and the week prior was a ripe opportunity for me to get invested. So I bought two more shares worth of Johnson & Johnson this past week for $174.66 for a grand total of $349.32. Now, Johnson & Johnson is going to be one of my never sell companies, specifically because it is a dividend king that I only foresee continuing to pay out dividends for years and years to come, while also increasing that stock share value. Now, their dividend yield is currently sitting at 2.44%. I'm just excited about Johnson & Johnson and their growth, and of course analysts are as well, as they're predicting Johnson & Johnson's stock share price to go up to a median share price of $189 and a high share price of $215. And last but certainly not least, with last week not necessarily presenting me with a ton of opportunity to double down on specific or individual stocks, I just went ahead to literally buy them all. And I did so using Vanguard's total stock market ETF, that's ticker symbol VTI. Now, between VTI and another index of Vanguard's, that being VTSAX, it allows me to literally throw money into the market, not have to worry at all about my investment, and kick back, relax, enjoy the ride of the stock market, because I'm a long-term investor just investing in quality companies. Now, to break VTI down for you, it has companies from Apple, Microsoft, Amazon, Tesla, J&J, Nvidia. I mean, you name it, it is probably within this fund. It is a broad market index fund, which just allows you to capitalize on almost every single stock out there. With that being said, I mean, literally, you cannot beat investing in a broad market index fund like VTI or VTSAX. Now, prior to last week, I had 9 total shares of VTI. I invested in one share this past week for $234.07, bringing my total share count up to 10 shares worth of VTI. Of course, anytime I can't really find an individual stock to invest in, it's either going into VTI or VTSAX for the win, and overall incredible returns coming in from these two indexes. And that is it. Between Stag Industrial, Johnson & Johnson, and VTI, those were the 3 stock picks that I chose last week to throw more money into them. If you've liked what you heard, you learned something new, definitely go ahead, drop comments below. I'd love to read through them. If you yourself are interested in investing in any of these opportunities, just do yourself a favor, make sure you do your own due diligence, never just take a random YouTuber's word for it. And of course, before we close out here, go ahead, tap on that thumbs up button, help me grow the Blue Lion Finance channel and get the word out there. And if you haven't already subscribed, go ahead, tap on that subscribe button for me, because I'd love to have you along the journey with me. Now, YouTube, until the next video, I will see you all there.